So once again, the Canadian dollar plunged, and this time on a lower inflation report that came out today. The inflation report that came out today came in weaker than expected. We had the headline number coming at 1.9% versus 2%. This is the year over year number. The month over month number came in at 0 versus the expected of 0.1%. And when we look at the core number, which takes out volatile numbers, the year over year number came out at 1.6% versus 1.7% from the last month. And the month over month number came at negative 0.1% versus the previous month's report of 0.4%. And this weakness in the inflation report gave signals and signs to the markets that the Bank of Canada should continue to cut rates and maybe possibly cut more. Thus, the Canadian dollar plunged against the US dollar, sending the USD CAD at 1.4 now. Now, like I mentioned in my previous video, we have the US FOMC Fed meeting tomorrow. They're probably likely to sound hawkish, which could send the US dollar further higher and the Canadian dollar against the US to move lower. And we're not far from 1.45, 1.46, which we could see soon, sometime. Now, let's go back to the Canadian inflation report, break it down a little bit here. So, the prices for food purchased from stores rose about 2.6% year over year in November. It's down slightly by 2.7% in October. Despite the slowdown, grocery prices have remained elevated and it looks like they continue to do so, which sucks because food and groceries are important for our day-to-day living. Compared with November 2021, grocery prices rose 19.6%. Similarly, shelter prices eased in November. Prices have increased 18.9% compared with November 2021. Gasoline prices fell in November. Rent prices, they accelerated while mortgage interest costs continue to decelerate. So this was interesting. The shelter component grew at a slower pace in November, rising to 4.6% year over year, following 4.8% in October. So a little bit down versus the October's number. On a yearly basis, prices for rent, however, accelerated. So mortgage costs are declining, but rent is becoming slightly higher. And in November, it's plus 7.7% compared with the last report of positive 7.3%, applying kind of upward pressure on all items CPI. Rent prices accelerated the most in Ontario, plus 7.4%. Then Manitoba, 7.9%, higher than Ontario, and Nova Scotia, plus 6.4%. High rents in those areas. Conversely, the mortgage interest cost index decelerated for the 15th consecutive month in November, plus 13.2%, rising 14.7% in October. The mortgage interest costs and rent indices contributed to the most 12-month items in all items CPI increase in November. Black Friday and related sales contributed to lower prices. Black Friday related specials and typically offered during the month of November. These discounts partially contributed to lower prices across several major components and were particularly notable in household operations, furnishings and equipment, as well as clothing, footwear indices. That's just Black Friday. Prices for travel services, they fell at a slower pace. Less people traveling. Travel services fell in November negative 6.7% compared to October of negative 7.1%. Smaller decline was due to higher prices for traveler accommodation, which was positive 8.7%. So people are traveling less because rent is higher, food is higher, your certain basic needs are just higher, therefore you can't really go out and travel and do the all interesting stuffs, especially with holidays coming up. But let's see, things may change when we get the December report, right? Let's now look at these components again, but analyze them a little bit further and look at November versus October. So like I said, a recap here, food and shelter were big components that continue to be elevated, although lower than October's numbers, right? So we got, the last report came in at 3%. November's report came at 2.8, so a little bit lower, but still elevated for food. Shelter, 4.8% versus now 4.6%, a little bit lower, but still elevated. So there you go. You got food and shelter, the two most important things to live, still elevated. Makes sense why people are not traveling that much. Makes sense why people are probably taking advantage of Black Friday deals and what have you. Household operations, furnishings, and equipment, like I mentioned, minus 0.7% versus negative 0.1%. Okay. We're seeing prices decline there because people are not spending like they used to, especially if food and shelter is still high up there. Clothing and footwear, negative 3.8% versus October's negative 2.3%. Transportation went up a little bit higher, 1.1% versus October's 0.2%. Health and personal care, this report came in at 2.8%. October's came in 3.1%. Elevated, but went a little lower. Recreation, education, and reading, negative 0.9%, stayed the same as October. Alcoholic beverages, tobacco, recreational cannabis, a little bit down, but 2.7% versus October of 3%. So overall, what does this report tell you? I'm laughing because it's sad. It tells you food and shelter, your basics, are higher, expensive. They're doing rate cuts, lowering the mortgage costs. Rent is going up, regardless of the rate cuts. Unemployment rate is going up. People are losing jobs or not getting jobs. And you have the Canadian dollar plunging and falling, along with the government turmoil with Trudeau, Freeland, and so on. Right? So you have all of this, and you have, hopes of maybe some sort of rate cuts to come further in the future, which is putting that downward pressure on the Canadian dollar. And then you have other competing markets like the US market, right, which is much stronger and doing much better than the Canadian market, and likely to see the US dollar strengthen and continue to strengthen against the Canadian dollar, which obviously means what? If we see that happen, it'll be more difficult for Canadians to travel to the US and enjoy a vacation there, right? For example, right now, USD CAD sits at 1.43. You get a recession, I would not be surprised to see USD CAD sitting at 1.7 on a recession event, right? Maybe, who knows, $2, right? $2. That would basically mean that going to the US during that time would be super expensive. Everything would be double for Canadian. So, weakness in the Canadian currency, weakness in inflation report, that should be a winning telling sign, but the weakness is coming from the other components, but less of the real things that matter, like food and shelter. And with the decline of inflation, I talked about the core CPI number was negative 0.1%. Once you start getting to deflation territory, that's telling you there's weakness in the economy. There's a lot of signs there to tell you that Canada is in trouble. And it's just, all you need is someone to just kick the crack. There's a crack. just kick in and it's going to collapse. That's where Canada is at right now. From the weak inflation, from higher food shelter costs, from higher unemployment rate, from instability in the government, from US dollar strengthening against the Canadian dollar continuing to plunge, and also fears of geopolitical tensions, fears of Trump tariffs, you name it. So it'll be interesting to see how this plays out in the next Bank of Canada's report. I'll definitely cover it here on this channel. And what's going to be super interesting is tomorrow's FOMC meeting, how the Fed, is likely to potentially sound more hawkish, sending the dollar further up higher. But let's see. I'll report on it once it comes out. Anyways, let me know what you guys think. Leave a comment below, subscribe, hit the like button, bell icon to be notified next video, and I'll see you guys around. Cheers, bye.